Shares of Robinhood are trading at $21.17, and they are up over 71% year to date. Zooming out on the chart, you can see that this stock had really dropped off in late 2021 and is now poised for a recovery. In terms of fundamentals, Robinhood has beat 3 of its last 4 earnings calls. The probability of bankruptcy is around 60%, which is not good, but their debt to equity is around 61%, which is great. They do not offer a dividend, but their revenue and net income have both been trending upwards over the past 2 years, especially the quarterly income, and it looks like they may achieve a positive EPS sometime in the next couple of years. The average one-year analyst price forecast is $20.86, which is 1.5% lower than where it trades today, with a high estimate of $30 and a low of $14.50. Robinhood's current price-to-sales ratio is 9.23, which is just under the sector average of 10.39, but is historically pretty high for the company. For December 30th, 2026, Robinhood is expected to earn a revenue of $2.6 billion, which works out to a revenue per share of $2.97. And taking a look at their price-to-sales history, then I think that we can expect it to rise just slightly to meet the industry average at 10, which would result in a share price of $29.70 or a 40% upside. And really, the only concern I'm seeing about this one is the probability of bankruptcy estimation is very high at 60%, but I think it's just high because of a lot of the problems they've had in the past with, concerns of financial distress. But again, those seem to be issues that they've put behind them. And going forward, I like the fundamentals, and I think that Robinhood presents a really solid risk to reward ratio, and I think that investors would be wise getting in at these levels. Anyways, that's all I have for you today on Robinhood stock. Drop a like, leave a comment, and I will see you next video.